All right. Good morning, folks. Tim Davis coming to you guys with another weekend market review. Today is Saturday, September 24th, 2022. And here is how markets are shaping up as we speak. So on this past week, of course, we were taking a look and see if we were going to continue this downtrend, and we sure did. And I said eventually we would hit the June lows, and we are right at that level now. So what can we expect? Nothing just drops in a straight line. So this is what we expect to happen. Possibly the way things could unfold in the next couple of days. I do think we're going to eventually take out these June lows, but it's going to be a process. So here is the June lows on my left. We're right back at that level. All right. Hit that level, got a little bounce. So what do we expect? We are in oversold territory, looking at the full stochastics and the Williams percentage. And of course, the RSI on the daily chart. With that said, I still think we're going to end up going lower, but not right away. I think we'll begin the next week. We can have a nice strong rally, very possibly for the next first part of the week. But look what's happening with the 20 per moving average. As price action continues on this downward trend in this bear market, the 20 per moving average seems to be acting as a level of resistance. When we fell below that level in around August of this year, we got to bounce off the June lows, hit this area of resistance here, started to trickle down, and then it's like the 20 per moving average is starting to become another level of resistance. So with that said, we could definitely see a bounce, still small bounce beginning of the week. But I think this 20 per moving average is now in a down sloping reaction to price action. So we could see a nice little bounce. By the time we get this little bounce, first couple of days of next week. And granted, this bounce, it could looks significant to folks, but we're still going to be in the downtrend. The same type of bounce we got here around September, we could see the same. Would I be surprised to see the same type of bounce as we approach towards the end of this month? Something similar to that. The same type of bounce we got there, we could see the same type of bounce as we approach next week. So price action rallying, maybe up to that point. Then we have to see what happens. I don't think we're going to get a strong bounce, but I think we're going to get a significant bounce. It may look pretty strong. We could see the Dow bounce back up several hundred more points, several hundred points to the upside. That's a possibility for the next first couple of days of the week, or it could be all of a sudden. But I think once we get that bounce, we'll run back into this 20 per moving average, as we did here, long stretch of red. So that was a long stretch of red. So we do for green after such a brutal week. So we could see a nice little rally up around to this point, maybe some levels we're looking at here. So would not be surprised to see a rally maybe up to around 30 or over 30,000, just back over 30,000, maybe 30,000 for 3 to 500, somewhere around there, maybe on the Dow, possibly. I don't see possibly because I don't think these rallies are going to be strong. So maybe 800-900 points on the Dow. That's a very possible. It's a very possibility. Since we had such a big sell-off on this past week. So don't quote me on that, but somewhere around there, and then we could see another reversal. Now, the next reversal, I think it's going to take out these June lows. So maybe towards the end of the week, we could be possibly looking at the June lows being taken out in a big way. So especially if we get a big bounce, if we get a decent bounce, we're going to run right into that 20-period moving average. And after we get that running to that 20-period moving average, I think we're going to see price action start to reverse. So that's what we look like in the Dow Jones. Then if we was to glance at the S&P, you will see the same scenario. Price action almost down to the June lows, with RSI, wins percentage, Fostochast's on daily chart, all in oversold territory. So again, do expect to see the 20-period moving average to continue to start to trickle lower. Sort of like that. And I do expect to see price action maybe bounce right into that 20-period moving average, and then get that break and finally fall below that 20-period. I mean, below the June lows. That's what I expect that we could see around in the next week or the beginning of the following week. Definitely between the end of the next week, or which is end of the month, or definitely into October, we could see this bounce and then another leg down. So expect some type of rally within our markets during sometime next week, possibly. So if we get that rally, we're probably going to it's going to be met with some strong resistance at the 20-period moving average. Now let's take a look at the VIX real quick. The VIX also, I like to use that VIX as a leading indicator. Show you guys how strong this move I think that we're in is possibly going to be. So the VIX is definitely inverse related to the S&P. So again, we did see a VIX that popped above 30 on last week, came back down a little bit, but look at this. Look at this price action in the VIX, folks. That's what I think we're going to see in this VIX. A little zigzag motion, and eventually you really start to launch forward. And as price action is going up, look at the 20-period moving average. It's acting as a level of support for the VIX. It's not budging. It's not going lower. It's just continuing to trickle higher. So I suspect to see the same type of thing as with the regular markets. We're going to see this 20-period moving average act as a strong area of resistance above support. So we'll see price action follow this 20-period moving average. Something similar to that. So with that said, we can definitely probably see some type of pullback in the VIX as the 20-period moving average goes up. We got this big long got this big body candle. It was a solid candle before we ended the day on Friday, and then this long wick at the top, which leads me to believe that we're definitely going to see some type of pullback in the VIX, right around maybe to the 20-period moving average, maybe around 27 to 26, and then we get a little reversal back to the upside. So by the end of next week, beginning of October, I do expect to see the VIX really starting to ramp up. But the bears had this nice little reaction toward with all the Fed information this past week and all the data that's been coming in. So I think the bulls are now going to try to make a stance, and I think they're going to be sadly disappointed. So any strong rally we get is probably going to be an opportunity to make some more bearish bets, and another opportunity for those long and hold investors to possibly lock in some profits. Let's look at a longer term chart, because for those who think, that these rallies that we see are going to end up turning into something big, let's take a look at a longer term chart. Again, here is a look at the VIX weekly chart. Folks, this is not strength, I don't know what to tell you, but Doesn't look like a bullish narrative for the markets is in store anytime soon on a longer path. This VIX is definitely looks extremely strong on a weekly chart, which tells me that for the next several weeks, possibly, we're going to see some strength in the VIX. That's one thing. Now let's take a look at an S&P weekly and monthly chart. Here's a weekly chart on the S&P. Look at the strong divergence. Look at the strong movement down in the four stochastics. Wins percentage and RSI. And look how price action rallied off the June lows back up into a level, an area of resistance, and it got a strong push downward on a weekly chart. And look at where we're at now. We're right back at the June lows area. With another candle that's kind of like pressing on this level of support. So although we may see a little bounce next week, the weekly chart is definitely looking strong in favor of the bears in a major way. So I think once we get this quick little bounce and a test of the June lows again, I think all bets are off if we break this level. We break this level down here, all bets are off. We could be definitely headed towards the to test the reversal level that we saw in 2020 when stocks hit those highs and reverse to the downside. Let's take a quick glance at a monthly chart. Show you the strength in this bearish market. Look at this, folks. The monthly chart is definitely signs that we could be definitely heading to big time oversold territory on monthly charts, and that's going to be crucial. So I think October is going to be a really bad month for stocks. That's just my opinion, the way things are shaping up. Look at the 20-period moving average on the monthly chart. It is just starting to turn lower. At this little sideways pattern, it's like it's just starting to tip lower. And as you can see, price action is like on the monthly charts, it's just bouncing, pulling back and bouncing into this 20-period moving average, just coming right back down. I think it's going to be a lot of pressure towards the end of this year on markets. If the monthly chart doesn't get a big, strong reaction back above this 20-period moving average, well above April, June, July, well above these highs, and we saw beginning of this year, that 20-period moving average is going to act as a strong level of resistance on our weekly chart, monthly chart, for sure. And that's what we're probably going to see, a continuation over the next couple of months. Could be very brutal. So look at the technicals, pay attention to the economic data, and ignore the talking heads that we see all over, some of these channels saying that, hey, we're about to head into a new bullish cycle. Don't think that's happening anytime soon. The bearish narrative is just too strong and it's set up perfectly. So again, I think October is probably going to be a rough month, and depending on how far we go in October, if we break this, the highs that we saw in 2020, we're going to be racing towards the lows that we saw in 2020. So let's see how this pans out over the next month. I think things are definitely about to get very interesting with these sell-offs and these rallies. Let's look one more thing that I like to pay attention to that I haven't looked at in a minute. Then we'll be done with this review. But I think the narrative still stands. It's still in favor of the bears. We will see these low ricochet rallies up, and then they'll probably be sold off strong. Look, one more thing here. Got a strong the breadth is in this bearish cycle every time it turns bearish. So at the beginning of my Twitter feed, I'm still here because I haven't looked at this in a minute. I have a link to the Wall Street Journal on 52-week highs versus 52-week lows. It pretty much just shows us the highs versus the lows for the close of that day. So this reading was taken 4:15 p.m. on 9/23, which was Friday. And what it shows is the New York Stock Exchange, as you can see here. New York Stock Exchange and the NASDAQ. Okay. And as we scroll down here, first of all, you see that for new highs created by the close on Friday, created 8 new highs, 8 new 52-week highs. Now, if you scroll halfway down, you'll get a chance to see how many new 52-week lows we created. That shows you the breadth, the overall breadth of the market. Let's scroll down. This is for New York Stock Exchange. Scroll down. Look at that. Created 8 new highs, but look at the amount of new lows that were created, folks. If this is not a big bearish narrative, I don't know what it is. 1,107 versus 1,107 new lows versus only 8 new highs. That is a strong and extremely strong bearish narrative. Now, so that's a big time bearish narrative breadth of the market. Now let's click over to the NASDAQ side. A little bit better here. 26 new highs. 26 new highs versus, let's see, drum roll, scroll down. Ooh, even worse. 1,000. Look at that. 1,248 new lows. I would say that this breadth of this market is extremely negative, folks. So whatever rally we see next week, pay attention to this breadth of this market. Whatever rally we see next week, it's probably going to be sold off and sold off hard. So if we see a rally Monday, Tuesday, Wednesday, maybe even Thursday, don't fall in love with that rally because there's going to be a reckoning coming right afterward, more than likely. All right, folks, this is all I have for you guys. Hopefully this is something that you can use. And again, batten down the hatches. You can take profits on these drops as we go along, or you can ride the wave if you got a longer term view on a bearish stance. You can ride the waves. Until the next video, Tim Davis here signing off. Enjoy the rest of your weekend, and I'll catch up with you guys next week.